Welcome back to another episode of Freedom Finance with Lanny, guys. Sunday night, and you knew I wasn't done yet for the week without making a quick video for you guys. And today and tonight, I'm really going to talk to you guys about, yes, the Fed cut rates for the first time in over a year, obviously since they started raising them, and it's been multiple years since they have been on a rate reduction path. But the point of this video is going to be talking about some of the highlights with what's going on with the market, but really my take on what I plan on doing in a few different areas, such as my ETF investing, my individual stock investing, my savings habit, as well as the real estate market, because I've been looking for a house for quite some time, guys. So grab your favorite beverage, your beer, your liquor, your wine. Get that Sunday night coffee going because you're Italian, baby. And let's dive into my take on the Fed rate cut. Let's dive in. Shock news, guys. The Fed did cut rates. Yes, I know. First time you've probably heard it right from this channel. No, just kidding. Obviously, everybody and their mother are doing videos on the topic, but hopefully mine's just going to be a little bit different. So the Fed did reduce rates 50 basis points, guys, bringing it all the way down to call it 5% for the Fed funds target rate, guys, from the 5.25 to 5.5, really 5.5 from where they were at. So this is big. They announced it on Wednesday, and the next FOMC meeting isn't until November 7th. So keep that in mind. We're about 45 days, let's call it, away from that next meeting where another rate, shift could happen. But what happened after the announcement from Jerome Powell? Well, first, the S&P 500, hey, they had a 5-day, nice weekly positive return in the market, 1.56%, setting a new all-time high, crossing over 4,700 in the S&P 500. It's big news, especially for the VOO every single day investor. Check the video out. Quick plug, if you know, you know. Been buying VOO every single day. And then let's shift to a different market that we rarely talk about here on this channel, the crypto market. Let's talk about Bitcoin. Bitcoin is now, come back, broke through that 55, 60, now they're over 63,000, I believe, at the time of this video. So for all you Bitcoin enthusiasts out there, this week they're up over 2.5%, providing some positive returns there, guys. You have to like that too, as just an overall investor, seeing positive returns. And then what else? Well, mortgage rates are at their lowest point for just about a year and a half. So rates are slightly coming back down, not because of the rate cut, guys. This has been all priced in for some time, but rates have been dropping. The 30-year mortgage rate really ties into what direction the 10-year treasury rate. And if anybody's been aware, the longer-term treasuries kind of had a more positive swing in the yield. So not necessarily mortgage rates have dropped at all. If anything, they might have even slightly risen towards the end of this week. Let me know what you're seeing in the mortgage rate space below. So I really wanted to hit at least on what's happened. Positive returns in the S&P 500, positive returns in the Bitcoin / other cryptocurrency markets. Mortgage rates are dropping. And, I know. What's going to happen November 7th? Well, according to CME, FOMC, analyst expectations for November 7th, they're locked in already for 100% estimation that there will be a rate cut, 50-50 on 25 basis points, a quarter cut as they call it, or 50 basis point, a 50 bagger cut, like the one we just saw. So they're already estimating another rate cut is coming, and that might be already priced in or has been pricing into the market right now. So just keep that in mind. The shorter term rates are definitely plummeting, but those out 3-5+ year rates and longer are kind of hanging steady right now. So I'll have to see what this week actually brings to the table. So what do I plan on doing, guys? Well, from the ETF space, keep it high level. When rates go down, that means Cash is cheaper out there in the market, which means usually asset prices rise. So that's why I'm going to stick with my Vanguard trifecta, VYM, VIG, VOO, buying VIG, VOO every single day and VYM every single week. Not changing that, guys. If you thought I'd slow it down, you're wrong. Take a sip of that espresso. What about the individual stock market? Well, you know, if you see an opportunity now, it might be a good time just to grab a little piece. You know, I've been buying PACCAR, not a recommendation, do your own research. But, you know, if you see some value, grab it. I always say if you find value, grab it, especially in this volatile market. Now, typically, markets somehow drop after rate cuts start happening because of recession usually follows. But not to say this time it's different, but I always say if you find some undervaluation, just buy. You know, and I've been a little bit more keen and stern with my analysis before I buy an individual stock. So I'm going to keep that up. You know, if I see more opportunities now, I'll buy. I want to put more money in the market. Presidential election, you know, a lot of different things going on this year. You know, and again, if we have another year of a positive return, next year will be very interesting. In 2025, but maybe that'll be another teaser video. That's a little tease right there for you. Now, what about the real estate market? I know I told you guys I've been looking for a house for, gosh, feels like 3 years. My wife, my family, and I been saving. You know, most of my money's locked in and no penalty CDs. So you know I've got 5% money still working for me. So if you guys are still in the money markets, high yield savings accounts, do not sleep on the no penalty CDs, guys. That's where most of my money is for our down payment, locked in between anywhere from 5 to 5.3% for the next handful to Q1 of next year, I believe. So still earning over 5% on our money, and it's liquid because I can pull it out at any time without penalty in case we find a house. You know, we'll still put money away, you know, kind of. We're more in a wait and see right now in the mortgage space, in the real estate buying of a house space. Heading into the cooler season, which usually more houses don't usually pop up, we're still seeing more come to the market. So our actions now is just, hey, wait and see. Don't settle on a house and don't overpay for a house. Really take what's in front of you. I'm not afraid to also put in an offer if it's the right house, and I'll put it in at the price that I think I'd be comfortable with. We've been seeing more rate cuts or price cuts on houses. Houses have been staying on for longer in my area, maybe different for your area. And I've just seen a lot of houses coming off and coming on, and even buyers dropping out from buying houses still. So houses coming back to the market after it's been pending or in a contingent sale. So we're seeing houses stay for longer. Prices are coming down in our area, which is a huge sign for us, but we're still staying patient for that right house instead of just settling for a house, guys. So that's what we're doing. Again, just want to put out a quick video. Still investing in the ETFs, going to be more prudent into the stocks that I like, not going to just chase undervalue because it's there. Again, buying quality, high quality businesses if the opportunity is there. It may be a good opportunity to even sell some of those stocks you don't want in your portfolio anymore. 3M, Para, WBD. So maybe a good time if the stock price rises with the rest of this market to take off that stock that you don't want in your portfolio anymore. And then staying patient with the real estate market because I'm seeing kind of the opposite of what I would expect. So it's very interesting right now, guys. So what are you doing post the first Fed rate cut in a very long time? Let me know in the comments if you're investing, what stocks you're buying, where you're putting your money at, or just overall what your thoughts are in the economy on a go-forward basis, guys. Remember to like the video, subscribe to this channel, and I'll catch you on the next one.